second half. I got three predictions for you, Mike Butler, and I want you to be as honest as you possibly can be with me, whether you agree, disagree, or you want to take the other side. Maybe we can make some bets between you and me for the second half of the year, because the first half of the year has been a historic one for sure. Kind of low key. Not a lot of people talking about the fact that the S&P 500 just had its worst first half of the year of this whole millennium. That's 22 years worth of data. This is the worst first half the S&P 500 has had, and that's including, the dot-com bubble of 01, 02, the financial crisis of 08 and 09, down 25%, the S&P 500, the worst that we've seen this stock market perform this millennium. Did that shock you, or did it feel like that?
It did feel pretty aggressive. I mean, down 30-40%. That's typically, if you look at the way that I visualize this, is looking at like a 401k's funds performance. Even if you're just looking at an index and they give you, that 10-year time frame, what happened here, and you'll typically see down 30%, down 40%. That's wrapped around your 2008s and your 2000s, where you have the big market sell-off. So I didn't realize it was the worst January to June of the millennium. That's pretty big news. But again, this is why I'm looking for products to buy here, whether it's through stock positions, whether it's through leaps, whether it's through short puts, especially again, because we see volatility going into contango. I think that only kind of adds to that theory that we might see a little bounce here. But again, if we see a 200-point sell-off, that contango is going to go away. So it's not a guaranteed leading indicator, but it is nice to see for sure. So I'm on board with this. I'm excited to see what you got.
Absolutely. And so I would agree with you. It's not necessarily part of my prediction number one here, but I would agree with you. We are due for a bounce in the stock market more than any other asset class. We've shown so much data, whether it's a day by day basis, week by week, month by month, or, biannual or even annual. When the stock market sells off in almost any time period, it is likely to bounce back in the next time period of the same length there. And so I would agree with your bounce assumption, but I did commit a good amount of research to, other first halves of the year where the stock market was down 5 or 10%. And there are, 6 or 7 data points going back to 2000 of such a case. And the average move was actually just slightly higher, more around unchanged than anything, which leads me to believe, yes, you should probably be leaning long into a 25% down market, but I think you definitely want to attach options to this. And I think that there's a case to even remain neutral. We've got the range for the remainder of the year being 320 to 450 in SPY. That's my first prediction, is that we stay inside of that for the year. Looking at options in SPY expiring in December, that's the range that they're quoting. And I'm a seller of those options, thinking that this market stays in that range. But that being said, you can just sell the put side of it, or you can long some shares of SPY and sell the call side of it. But I definitely want to be short some premium. That's my first prediction. What say you?
I like it. I think I'm right on board with that. I mean, if we get down to 340, 320, that would be a big continuation of this move. But again, we're already down 25, 30%. And going back up to all-time highs, I think is going to be difficult in the near term, just because when you consider how we got there and the COVID implications for a lot of these high beta stocks that just went to the moon, and now they're all down significantly, I think that's going to contribute to us not getting back up to 480 in SPY. So I'm totally on board. I think a neutral trade, staying within this range for the rest of the year, I dig it.
Yeah, I like the neutral trades, or like you make a very valid point. If the market drops in, say, August or September or October down to 360, 350, 340, I'm really going to look at gaining some long deltas in there. If it jumps up, if it bounces right back up to 440 or 450, I'm probably going to be selling into that type of rally. But yeah, like the neutral trades going forward, I think we will close the year in that 320 to 450 range as the options market's predicting. Another one for you, Nasdaq doing even worse. And I know a lot of people talking about tech stocks, and it's definitely well reported that tech stocks are performing worse than other sectors like energy and industrials and everything else. But I think that we're really due for a comeback here. We don't tend to see divergences between markets like SPY and QQQ to the tune of more than 5% in half a year. So my second prediction is that we're going to see some outperformance, a comeback, so to speak, in NASDAQ. And that's another bit of a neutral trade for you, where I'm not just jumping on here and be like, oh, all my predictions are buy, or sell. I'm looking at, a long MNQ, short MES trade, or, a short put in QQQ and a short SMES futures to get even smaller as a pairs trade that's also neutral.
Yeah, I like that too. We've seen a lot of these high beta stocks just get destroyed. Your Teslas, your Amazons, you name it, Apple, Microsoft. But again, why is that? It's because they had such a massive rally in the COVID times where everyone was digital. And now we're seeing moves away from that. But I really like this trade too, because SPY has your energy exposure. So you're kind of fading a little bit of that big move in energies while getting long a lot of those products that have been destroyed over the last couple of months. So I think it plays even more into that, but it does play into why we're seeing this much of a divergence too.
Absolutely. And last one here, another semi-neutral idea, which is I think the day trading is going to be really, really nice for the second half of the year. We've had, obviously, with the stock market down, 20 to 30%, depending on where you're looking, day trading can get skewed to that downside. And you find yourself buying, 3 or 4 days out of 5. I think we're going to see both sides of this market, and I'm going to be looking to jump on both sides of this market. Just this morning, an outside move to the downside in the stock market, and it bounces back, not huge, but bounces back into the range. And right here, you have the standard deviations on the new SMES futures, like we say, equivalent to about 10 shares of SPY, costing you just $350 to trade in margin there. And you've got a market, Mikey, that moves about $60, $70 per day. And so if it's down, a buck or it's up a buck, I'm taking the other side of that. And I think given our neutral stance on the rest of the year for this stock market, I'm definitely looking to trade both sides of it. And I think we'll continue to see, as we've seen actually in June a lot, which is big days in the stock market, but at the end of the day or week, pretty much flat, unchanged movement. I think that'll continue. And I definitely will be jumping on these day trading opportunities that we'll see in the second half.
Yeah, couldn't agree more. And I think when you see volatility, VIX futures at 30 and kind of just hovering around there, that speaks to your possibility for this two-sided action much more than if the VIX were at 15. So yeah, couldn't agree more.
Absolutely, my friend. Thank you for agreeing with all my predictions. Mike Butler is the absolute best. Such a nice guy. He's great at plugging all the new products from the small exchange, and he agrees with everything I have to say. Couldn't ask for a better friend. Mike Butler, thanks as always. Everybody else, thanks so much for watching Small Stakes. We'll be back tomorrow with more futures action, but stay tuned. Splash into Futures is coming up next. Have a great night, everybody. Peace.